afternoon and welcome to the Chicago Treasurer's Office new financial education series. It's called Money Matters Institute, or MMI. We are so excited that you're here and we thank you so much for joining us. I'm Dana Eubanks, Director of Financial Education at the Chicago Treasurer's Office, also called the CTO. And on behalf of City Treasurer Melissa Conyears-Ervin and the CTO, we thank you for joining us today. The mission of MMI is to empower all Chicagoans with the knowledge and skills needed to make informed financial decisions to build wealth today for tomorrow. MMI is a 3-session series, including valuable opportunities to learn at every level, online, in person, and through one-on-one financial counseling, all free of charge. Today's session is called Crack the Credit Code. Whether you know it or not, every one of us has a credit score. What is a credit score? What's the difference between a credit score and a credit report? How is it calculated? Why does it matter? First, we are joined by Tracy Anderson, Strategy Leader for U.S. Markets at TransUnion. Tracy also leads TransUnion's Racial Equity Task Force. TransUnion is one of the big 3 credit bureaus and is headquartered in Chicago. TransUnion maintains the credit histories of millions of consumers worldwide and provides reports to over 50,000 global businesses. Second, Pam Stalling is Vice President of the Chicago Urban League Housing and Financial Empowerment Center. Pam will address the personal relationships with our credit and money. The Chicago Urban League also provides one-on-one personal, confidential financial counseling. We begin with Tracy of TransUnion. Thank you, Tracy.
Thank you, Dana. I'm excited to participate in this event and this institute. So today I'm going to cover 3 things that I want our listeners or our viewers to take away. One is a better understanding of credit and credit scores. 2, tips for how to improve your credit score. And 3, understanding of how to monitor and manage your credit history and credit score. So let's start with what is credit and why does it matter? Next slide, please. So credit is really, if you think about it, credit is a commitment. When you go to a bank or a financial institution, you're requesting either funds up front or a product or a car or a mortgage or something up front in exchange for paying for that thing in the future. So credit is access to, again, receiving something up front and then paying for it over time. And it's a commitment to pay. So it's a contract for lack of a better word. And healthy credit will impact how much you pay for that service of credit, and that's in the form of an interest rate. So when you think about, how much you want to spend on a car, for example, you want to make sure that you are thinking through not only the price of the vehicle, but also the interest rate, because that interest rate will impact how much you pay. So let's look at an example. Next slide, please. When you think about interest rate, there is, it really can matter a lot. And I'm going to use an example of a mortgage. So when you think about a mortgage, that's $300,000. If that mortgage is at 5%, you're going to pay a significant amount more than if that mortgage is at 4%. So in this example, $300,000 versus at 5% versus 4% over the life of that mortgage, 30 years, will cost you an additional $64,000. And think about that. That's the price of a luxury car. So that is one of the reasons why your interest rate and making sure that you're getting a healthy interest rate, or the most healthy interest rate possible, is important. But let's back up a little bit and talk about, what is credit reporting and how do you build credit history? And so on the next slide, please. When you think about credit and credit reporting in this building credit history, essentially that is a reflection of your actions in your history with credit. So, um, credit is, these are typical examples of what could be found on your credit history. So oftentimes a consumer, you may have a auto loan, you may have a credit card or two, a mortgage, potentially, and a student loan. This is not an exhaustive list, but this is the type of things that are reported to TransUnion as well as our competitors, and that will establish your credit history. And that credit history forms your credit report. Now, Danex shared that we are one of the 3 big credit bureaus, and essentially, we're an insights and information company. And so what that means is that we're taking information that is reported to us about you, and we're giving insights about that information to businesses that will use that information to extend credit to you. So your credit history is very important. Next slide, please. And your credit history is a summary of of your past relationships, or your past or in current relationships with credit. And if you think about it, this is something that oftentimes I hear folks, especially working for a credit bureau, may say, "Oh, you work for TransUnion, you messed up my credit, or you messed up my credit score." And I'm always like, did I mess it up? So I always challenge people to really be thoughtful about how you use credit, because whether you pay on time or you're late or you don't pay at all, those things, when it comes to these credit agreements, are reported to us as well as our competitors, Experian and Equifax and others. So it's really important that you establish good credit behavior or credit discipline, so that you have a good credit history. And that history is what is used to calculate your credit score. Next slide, please. So what is a credit score? A credit score is essentially a tool, it's typically a 3-digit number, and it's a tool to help a lender or someone who is going to extend credit to you. Is a number that is used to determine if they're going to approve you for credit. So, and it is used to evaluate your likelihood to repay a debt obligation. So what is the likelihood that if I give you $100, you're going to pay that $100 back in the agreed upon terms, whether that's $10 a month or $10 every 2 weeks, whatever the agreed upon term. Your credit score is taking information off of your credit report to assess. So your past behavior is calculated into your score, and that gives lenders insight into if they were to lend you more credit, what is your likelihood to meet the terms of that credit obligation. Now, oftentimes folks speak of my credit score as though it's one score, but there's actually multiple scores. So next slide, please. One of the 2 of the most popular scores are FICO and Vantage score. So you may hear about those quite a bit in the news, or just in your day-to-day online activity with your financial institution. And they are pretty popular, but there's also individual custom scores that the lender or the credit grantor may be using to calculate your score. But regardless of whether it's FICO or Vantage or a custom score that a bank is using, oftentimes they're still trying to do that same evaluation of what is your likelihood to repay a debt obligation. So let's look at what factors into your credit score. Next slide, please. So there's 5 key things that factor into your credit score. One is your payment history, your utilization, and we'll talk about that more in a minute, the age of your credit, the number of inquiries, and then the different types of credit that you have. So those are essentially the key elements of what most, and I'm not going to say absolute because I mean there's a lot of variability here, but in most cases, when we think about a traditional credit score, these are the 5 factors that play a big role in what that score will be. But there's some things I want to dispel a few myths about what's not on your credit report or is not a factor of your credit score. And so next slide, please. So when you think about what's not on your credit score, demographic information. So your age, your religion, your race, your gender, things like that are not on your credit report. And so I want folks to know that although there are, discriminatory practices, unfortunately, in the financial service business as well as others, these specific things, when it goes to calculating your credit score, are illegal to use. Employment information, such as your salary, occupation, or title, those things are not, again, not a part of your credit score. Now, what I want to clarify here is that oftentimes when you're, again, I'm going to use my example of an auto loan, a auto financer may say, well, you have to make a certain income to qualify for this car. That may be true, but that is separate from your credit score. So sometimes in making a lending or a credit decision, they'll use your credit score as well as your income and other factors to make an ultimate decision. But I am focused on what is in your credit score. And then lastly, other information such as if you're using a credit counseling service and things like that, those are things that are not a part of your credit score. So those things, you should not worry that that is factoring into your credit score. But knowing what's in your credit score and what's not in your credit score, let's look at ways that you can improve your credit score. So next slide, please. So 3 things that you can really focus on when you think about trying to improve your credit score. And that is making payments on time, keeping your balances low, and then keeping your credit history as long as possible. Because those are things that again, when lenders are looking to make a decision on if to extend credit to you, they're going to look at the score, and these are ways that you can improve that score. Next slide, please. So when you think about on-time payments, we want to make sure that even if you're only making the minimum, even if you're only paying the minimum amount due, that's really important because, as I stated earlier, it is that payment obligation that you want to meet. You want to demonstrate your responsibility to pay as you have promised. So whatever that amount due is to pay the amount due when it's due so that you don't incur a late payment on your history, because that will decrease your credit score. You certainly don't want to ignore your debt obligations, and to always try to honor them. Things like bankruptcy should be last resort. I know there's oftentimes, which is a little frustrating to me working in this industry, sometimes you may be advised to oh, just file for bankruptcy and all of your debts will be forgiven and, you can get out of everything. Well, that's not always the best advice. I'm not saying there's not ever, a life event that will require bankruptcy filing, but these are things that will hinder your ability to use credit in the future for a very long time. So, filing for bankruptcy, letting your accounts go into collection, those are all very negative impacts on your credit score. And so although you may be frustrated today, but to kind of throw your hands up and give up, knowing that, a week, a month, a year from now, you may want to use credit to buy a new car or to get a credit card or to buy a home. And those things that you did not so long ago will really limit your ability to, one, get approved for credit. And if you are approved, you're going to pay a lot more for that credit than if had you demonstrated more responsible behavior in the past. So again, I understand life events happen, so you may not always be able to pay those obligations, and that is not what I'm referring to here, because life happens, right? But what I'm talking about is when you have the opportunity and you're making a decision to pay or not pay, my encouragement is always try to pay those obligations so that you can keep a higher credit score. Next slide. Now, we talked earlier, I mentioned utilization, and this is always a tricky one that folks often challenge me on. So when you think about credit and a decision to extend credit to you, they want to understand what is your risk of paying that credit back. And so they want to understand how much indebtedness are you in today. And so they oftentimes, part of what goes into your credit score is how much credit are you utilizing today? And if you're using a lot of the credit you have currently extended to you, you can seem more riskier to someone that has credit available that is not using it. So when you think about it, so we have a quick example here. If your credit limit, which is the maximum amount that you can borrow, and this example is a credit card, if your credit card limit is $10,000 and you have a balance, meaning you've charged it up to $8,000, that means that you have a very high utilization. So you're at 80%. You've used 80% of the available credit to you. And that person in that scenario is that's going to negatively impact their credit score because you've used a lot of credit. You have greater indebtedness than if someone with that same credit card has only used $1,000. Because it's $1,000, you don't have as much in current debt. And so a creditor or so the impact to your credit score would be more favorable, and therefore when looking to seek more credit, your credit score would be more favorable. Next slide, please. Another tricky topic. Is the impact of closing your account. It's another sometimes emotional reaction to, I paid this credit card off, I'm going to tear it up because I don't want to get in debt again. So I'm going to close my account. I'm going to physically tear it up the card, and I'm going to call the bank and close the account. I'm not saying you don't do that, but I'm cautious. I'm asking you to be cautious to think about those actions before you take them. One of the things that factors into your credit score is your length of credit. And so you want to make sure that you don't sell yourself short by closing an account, because over time, that account will fall off your credit report. And so it doesn't reflect positively on your credit score because it would shorten your history with credit. And based on what we just said about utilization, whatever that available balance is, will be would no longer be available for your cumulative utilization. So my suggestion is always think about the pros and the cons before any actions related to your credit. If you close this credit card, it could have some negative ramifications. And I'm speaking in it might, because everyone's credit history and credit profile is unique. And so some things will impact one person more than it will another. And so keep those things in mind as you are making decisions. Now, I like the idea of pay out the account, but leave it open so that you have that utilization, that impact on utilization and your history, but it doesn't mean that you have to use the card. You do have to use it every once in a while to make sure the bank doesn't close it because you're not using it at all. But again, be mindful of when you close an account, all the ramifications, because the goal is to have the highest credit score possible so that you get approved for credit when you need it, and two, that you pay the least interest possible. Next slide, please. So hopefully this is the last section. So we've talked about what credit is and your credit history and credit scores, how to improve your scores. The final piece is how to manage your credit and credit score. There's several websites that will give you your credit score for free. I'm not going to endorse any today, but often your financial institution, who you bank with today, oftentimes will give you your credit score for free if you sign up for one of their, you sign up for an online account with them. You can also, there's some different platforms you can use to check your credit score. Also, I want to distinguish between your credit report and your credit score. So as we talked earlier, your credit report is a history of your credit, your current and past credit, trade lines or accounts. That is your credit history. So sometimes, like annualcreditreport.com, you can get a free copy of your credit report. That doesn't necessarily come with a score. That score is a calculation. The score is based off your credit report, but not all platforms give you both. So just keep that in mind. There's also some paid credit monitoring services. I would say check and look at the additional benefits for paying for something versus getting it for free, because unless there's an incremental value to paying for a credit monitoring services, you can oftentimes find a site that can give you that information for free, which again is just saving you money. But let's talk about why it's important to monitor your credit. So next slide, please. There's a couple of reasons. One is fraud prevention, and that's not always as obvious to folks, but especially with so many things being digital, if you are the unfortunate victim of an identity breach, if someone takes your identity, your information, and opens a credit card or some sort of credit instrument on your behalf without you knowing, if you're checking your credit report, you should recognize every account or trade line, as we call it, on your report. And if you don't recognize something, then you need to call the institution and investigate that, because that could be a potential fraud. And you want to acknowledge that early on so that you can take care of it right away. Also, and I've experienced this when I bought my first car, is making sure you know what your credit score is when you're planning for major purchases. Nobody wants, including myself, to be denied. So when I, fresh out of college, went to buy my first car on my own, I checked to make sure what my credit score was, so that when I went in and, you know, shopping for cars, and then you go into the finance room in some cases and they're checking your credit, you want to know what your credit score is. You want to know that you can, that you should be approved for a particular loan. And if if your credit score is not, and you can look online and they'll give you guidance as to what is typically you needed to be approved. But you want to know that going in, because if you're not ready, if you need to work on your credit a little bit, let's spend your time doing that before I'm going to the dealership potentially, if you have that of an option to wait, because you want to, one, walk in with knowledge, because knowledge is power, know what your credit score is, and also know what the going interest rates are. And so again, that's really just helping put the power in your hand when you're buying a car or a mortgage or whatever that major purchase is. So those are two good reasons to really monitor your credit on an ongoing basis. And then the last one, and the next slide, please, is um, for inaccuracies. Nothing is perfect, so sometimes your creditor can make a mistake on how they report your information to us, or maybe TransUnion or one of our competitors. There can be errors in data. So you always should check your report for accuracy. And if something is inaccurate, I suggest you go to either our TransUnion website or one of our competitors' websites and dispute the inaccuracy. It may take up to 30 days for us to fix it, but it is something that you can do on your own. And I'm just pointing this out because oftentimes you will find advertisements, and unfortunately, it often targets underserved communities uh, with, oh, pay me, $50 and I can get this off your credit report, or I can fix your credit for you. You can file a dispute fairly straightforward on transunion.com, or again on our competitor's site. It's not a quick process. It could take up to about 30 days, but you can address those issues yourself. And again, nothing's perfect, nothing's foolproof. So I encourage you to check your report, not only for fraud, for just informing yourself, empowering yourself for major purchases, and also for inaccuracies. And this is just what you're looking at is a screenshot of the site on TransUnion, where you can file what is called a dispute. Next slide. And one last quick question. I know I'm out of time, but I just wanted we put this slide in because I wanted to make sure we covered this common question around employers. Sometimes when doing a background check, an employer will check your credit history. They don't get a score because they're not engaging with you for a credit obligation, but oftentimes as part of a background check, they will ask for your credit report. And generally, what they're looking for is get a better sense of who you are. If you're someone who pays your obligations on time, then you're likely to be seen as more responsible. So you're more likely to show up for your job on time and do the assigned work to you. You're more responsible if they see that you're paying your debt obligations on time. There's a host of reasons, but that's a common one. You have to get consent for them to pull your credit report as a part of a background check, but your score itself is not a part of that transaction. So this is my last slide. Hopefully this information has helped you crack the credit code, as Dana stated, but I'll stick around, so if there's any questions at the end, I'll be happy to come back and answer them. There's a few more tips. So there's a few more tips. Again, don't aim for a specific credit score because all the different things that I mentioned will impact your score, but what you really want to do is make sure you stay in a healthy range. It will go up and down slightly, but make sure that you are doing recent, recurring checks of your credit so that you stay on top of it. And if there's a problem or error, you can fix it. or if you fall into a situation where your credit score falls a bit, you can build it back. I've been there too, but you may have a setback, but you can always move forward. So now I think that's my last slide.
All right, thank you so much, Tracy. We appreciate your help, and that's wonderful. We do have a quick question, and I want to remind people you can post your questions in the chat, and we will answer the questions at the end of this segment. I'm about to introduce Pam Stalling of the Urban League, but there was a quick question. What happens if a creditor closes your credit card account?
Well, that depends on why they closed it. So it can be closed for if if you aren't meeting your obligation on time. So if you are not paying as agreed, they will likely close your account. But on the opposite side, they may close your account because you're not using that card, and there is a cost to them to keep that account open. So if you're paying your debt, your obligations as agreed, and maybe you have a zero balance credit card, you don't have a balance on that particular credit card, my encouragement is that periodically you do charge something, pay it off, but just charge it so that there is activity so that you keep that line of credit on your credit history, 'cause especially if it's zero balance, because that's going to help your utilization, and over time it'll help your credit age, the age of your credit.
Thank you so much, Tracy Anderson with TransUnion. And now you see on the screen Chicago Urban League, our next guest. Please welcome Pam Stalling. She's the Vice President of the Chicago Urban League Housing and Financial Empowerment Center. Pam is helping us examine our relationship with credit and money. Again, throughout the presentations, please feel free to post your questions in the chat. At the end of the presentations, we will respond to your questions. We just slipped that one in, but we will respond to the rest of them at the end of the presentation. Please welcome Pam Stalling. Pam?
Thank you so much. All right. So now, since we've heard the credit, how to crack the code, now my job as a HUD housing counselor is to assist you and help you with making whatever your goals are become a reality. So as a part of the Housing and Financial Empowerment Center, we offer free counseling. What does that mean? That means we're going to help you reach some goals. We're going to set an action plan for you because you're getting all of this information and you may not know where to start. So definitely look us up and we can assist you. So let me give you our mission. The Chicago Urban League works for economic, educational, and social progress for African Americans, and we promote strong, sustainable communities through advocacy, collaboration such as this, and innovation, because we're here to help our community. So what we do and what we provide, and part of my staff is, my name again is Pamela Stalling. I'm the Vice President of Housing and Financial Empowerment Center. Cynthia Jordan-Hubbard, she's Director of Housing. She's also focuses mainly in foreclosure. Deidre Beaver, her main focus is rental counseling. Pamela Gilbert, her main focus is pre-purchase or financial coach. And Eva-Lee Serrano, she's our pre-purchase financial coach. So all of the counselors are HUD certified. And that just means that we've had to take a test in 6 different areas of concentration, and we had to be very competent in those areas. So what does a financial coach help you do? Well, we help you understand the basic financial literacy, also help you manage your debt, teaches money management, help you create your financial goals, and get a strong strategy to work towards them, help you understand how money impacts your personal relationship and self-esteem. We also help you figure out if you're eligible for different programs. And if you need resources, we can refer you to even get public assistance and just overall help you get a better understanding of your credit score and maybe perhaps how to increase it. The benefits of financial counseling. Overall, financial counseling can provide numerous benefits for individuals and their families. Next slide. So part of this is helping you understand your financial situation. Sometimes we get into a situation where we realize, I don't even know how I got into all this debt. You got a credit card and now you maxed it out. So as a housing counselor, I'm going to take a look at everything meaning I'm going to ask for, if you come for a counseling session, I'm going to need to know what your income statements look like. So that's either check stubs, or even if you're retired, I'm going to ask and see how much is your how much you get monthly for your retirement. Then I'm going to ask you for your bank statements. I'm also going to ask you to fill out some information regarding your budget, as well as I'm going to ask you to pull your credit report. And why that's so important is because I want to get a total picture of your state of being, because you may think you're somewhere, but the paper is going to tell me exactly where you're at. So we're going to help you understand your financial situation. Financial counseling helps you gain a clear understanding of your current financial situation. Remember, I'm going to ask you for a budget and you're going to give me 3 things. And then I'm going to look at your bank statement and then I'm going to see several more things. So that coffee you get in the morning, I'm going to see that and I'm going to put that in the budget. That newspaper you get every now and then that shows up on your it shows up on your bank statement, I'm going to include that as well. By understanding your financial situation, you make informed decisions and you set realistic goals. Because I can't tell you, okay, great, let's pay this all off. And then I look at your budget and then there's nothing left to make those extra payments. So that is the reason why we want to get all of your financial information so we can help you set realistic goals. And it involves going through and analyzing your income, your expenses, your debt, as well as your assets. Sometimes you say, oh, well, I don't have enough money. Well, you know what? If you dig deep enough, you will realize how much you really do have. Next slide, please. So developing a budget. You need to develop a budget. And sometimes I like to call a budget a spending plan. So how does that happen? Financial counseling can help you develop a realistic budget based on your income and expenses. I always tell people, you can tell me how much you make, but then you can tell me how much you gross, but what do we know? We live on net. So can you tell me how much you net? Because that's where I'm going to start, is at that net amount. A budget enables you to track your spending, prioritize your expenses, and help you save money. So when we develop that budget/spending plan, we're going to have a line item, saving, and we're going to automatically just start sending money to that saving. As well as developing a budget, it also provides a roadmap to help you achieve your financial goals and can help you avoid debt. So just by developing a budget, sitting down, writing it down, and then executing it, it can help you reach your goals. So after we help you develop, then we're going to show you how to manage. So remember, I'm going to want to see that credit report. I'm going to also look at that score, because I'm going to ask you, okay, are you where you want to be? Where do you want to get to? Then I'm going to look at all the things that Tracy just talked about regarding utilization. I'm going to look and see what your credit limit is. And then I'm going to look and see where your balances are. And then we can devise some sort of plan to either avalanche your debt or snowball your debt. But what we can do and help you manage your debt, by effectively managing your debt, you can improve your credit score and can achieve financial stability. And you will be amazed. Once you get a plan in place and start to execute it, you'll be amazed that it wasn't as hard as you thought about. Financial counseling also provides strategies for managing and reducing your debt. Again, we're going to look and see what your goals are and advise you as the best way to get to your goals. We're going to also help you develop a client action plan, plus give you resources and perhaps negotiate or help you negotiate with your creditors. So what that looks like is an action plan. We're going to say, okay, what are your main goals? Now, your action plan, how we're going to get to reaching those goals. And sometimes, what do? We do baby steps. We're going to say, okay, let's see if we can save another $100. Where are we going to get it from? So that means maybe not eating out so much. Maybe that may mean maybe not getting that coffee in the morning. So if we can find ways and we can suggest ways, and then you automatically start buying into it, we can definitely help you manage your debt. Help you improve your financial literacy skills. So this is some ways in which we help you because you've learned on information from TransUnion on how to crack that code, how to increase your credit score just from the tips that we learned today. We also provide different webinars throughout the month that you can take part of. Guess what? That is free 99. Yes, again, that's free 99. Our counseling is, of course, free 99. We're a HUD-approved agency, and that means that we get grants from HUD in order to provide the services for you. Part of the service is not only the one-on-one counseling, but it's also giving you financial literacy skills. So tonight, we also have a credit budget savings webinar, and you're welcome to join that as well. But what does financial literacy skills help you do? It helps you improve your knowledge. So some things you didn't know or some things you heard, it will reinforce and encourage you to do so. By enhancing your financial literacy, you can better make decisions and avoid common pitfalls. So just by knowing your credit score before you go looking for a car would help you make a better decision to say, maybe I need to wait a little bit more to get that credit score up so I can be in a different category regarding my interest rate. It also provides educations on topics such as budgeting, credit management, and sometimes investment strategy. So we are not considered as financial advisors, but we can refer you or direct you to different websites that would give you more information. So we don't give you investment tips. What we do is, because that is not our scope of service, but we can refer you to different websites. We also nonetheless help reduce your stress levels. I don't know how many times I've had clients that come and get the counseling, and then afterwards they felt as though that burdens have been lifted. Now, I don't know if it's just me doing that, but really, I really think that it's just the pressure, because sometimes you have thought and thought and thought and thought, oh, how do I get out of this? And then I can just give you one suggestion and it just can relieve you of a lot of stress. So financial counseling can help reduce stress related to financial concerns. It provides a supportive environment to discuss and address financial issues. And by finding solutions to financial challenges, you can experience greater peace of mind and improve your overall well-being. So again, I may suggest something that you never have heard of before, and it could definitely, because what do we know? Our health is our wealth, and stress, stress kills. So, in order to get your free financial counseling, please give us a call. We do have counselors available to assist you, and it's just a matter of making sure we have all collected your documents in order for us to find out what's a better path for you to reach your financial goals. So give us a call at 773-285-1500. And if you come or happen to want to come this Thursday and meet us in person at Chicago-Ervin League, we will be willing and ready to help you. So we will be there from 6 to 7:30 this Thursday. And I am finished with my presentation.
All right. Thank you so much, Pam. We thank you so much, both to you and to Tracy Anderson. We do have some questions that have come in for both of you, so we appreciate it. I want to remind everybody, this is the time we're responding to your questions. So if you have a question, please don't hesitate to type it in the chat, and we will try to get to as many questions as we possibly can. A few that have popped up already, Tracy, also comes back up for you. And I want to share with you that someone asked, Andy, thank you for doing this. When I just opened a new credit card, it had some suggestions to increase your credit score. And one of those suggestions was to carry a balance every month. Why would I do that as opposed to paying it off each month? What do you say?
Great question, Andy. And let me clarify, because there are, in the industry, we consider it kind of a transaction or a revolver. So when you charge something on your credit card each month, but then you pay it off, immediately or shortly thereafter, you're demonstrating, that's considered, you're demonstrating positive behavior around being able to pay a debt obligation. And you're typically not paying interest on that because you're paying it off pretty quickly. So that's a nice way to help increase your score with all things being equal. So again, all of my advice is very situational, but all else things being equal, if you charge something and pay it off on a consistent recurring basis, that is demonstrating that responsibility that will improve your credit score. Now, when you carry a balance over time, and if that balance is over 30%, then that's likely to decrease your score because you're carrying a balance. Now, many credit card companies are not gonna are not gonna necessarily discourage you from doing that because they're making money on the interest. You're paying interest on that balance that you're carrying month to month. But it could negatively impact your score, especially if that balance is over 30% of your credit limit. So keep in mind, positive activity, meaning charging and paying off immediately, is demonstrating that you can charge something and you will pay it off based on the terms of the agreement. What could hurt you if you don't pay it on time, or if you let things carry month to month and you get above that 30%, and that's where you're going to see a decline. Hope that answers your question, Andy, sorry.
Thank you so much, very much, Tracy. That's very helpful. And then to both of you, we want to thank both of you and anybody else who had a message in the chat. We appreciate your engaging with us. This is our webinar. We meet you 3 ways. Webinars on Tuesdays, every other Tuesday, and then we have the Thursday session that Pam referenced. So I want you to look in the chat box. You'll see a link to complete our 2-minute Money Matters Institute, MMI survey, and that will help us better serve you as you see what it is that you would like to see, what you'd like to hear more about. And don't forget, again, you can join us this Thursday, May 9th at 6 p.m. for the next in-person workshop for more on Crack the Credit Code. That's at the Chicago-Ervin League, as Pam said, 4510 South Michigan Avenue. Spread the word, bring a friend or family member. Anybody else who's been talking about it, saying this is giving me such a headache, tell them, come on, we're gonna go together. It's, as Pam said, free 99. You don't have to pay a thing. This is a free service for you. Thank you again to our partners, Pam Stalling, who's Vice President of the CUL Housing and Financial Empowerment Center, CUL, Chicago-Ervin League, and Tracy Anderson, the Strategy Leader for the U.S. markets at TransUnion, one of the big 3 credit reporting agencies. An incredible opportunity to talk with you both, and we're so grateful to you. Be sure to follow us online and in person for more on the MMI, Money Matters Institute webinars and in-person workshops. And we want to thank you for joining us. Hope to see you Thursday, where it's an interactive conversation, very casual. You get to ask what you want, and we look forward to seeing you then. But again, Thank you for joining us for MMI, our webinar today, and thank you to you both.
Thank you, Dana. Thanks for having us, and thank you to the Chicago Treasurer's Office. This is a great program.
Thank you, and I'll see you guys Thursday.
See you Thursday.
See you Thursday.